Well, welcome back to another episode of Hospitality Investor here at IHIF Asia on day one. And I'm delighted to be joined by Yasin Mushi, who's the VP of Development of Asia. Yasin, welcome.
Thank you. Great to be here.
Yeah, thank you. So I've got to ask you, because Minor Hotels is a homebred regional brand that started off as an owner-operator, getting into lease models, and really has expanded certainly throughout the Asia region, but also the world. But now that we've got IHIF Asia, what are you so excited about? What makes you excited about the Asia region in terms of investment and development in the hotel sector?
Well, it is our home base. So this is where we started close to 50 years ago. We've grown globally, but I think for us, there are still a lot of pockets of opportunity within Asia that we've not explored yet. And we've also introduced new brands now. So I think it continues to be one of the most dynamic and most exciting regions for our growth and expansion. And I think the runway ahead for us in terms of growth is still huge in this region.
Yeah. So Yasin, I mean, obviously big plans for the region for Minor Hotels, currently 600 hotels and with plans for 850. What's underpinning that excitement for that rapid expansion?
Sure. So like you said, 600 hotels globally, and our ambitions are to grow very rapidly. We have a very strong pipeline. In terms of priorities for us right now, first thing is making sure that our growth is sustainable. So if you look at the portfolio of Minor today, about 70% of our hotels are leased or owned, and only 30% are asset light under management or franchise agreements. Our strategy is to balance that portfolio to about 50-50. So the bulk of our growth going forward is asset light, and so we are pursuing management and franchise agreements. That's our first priority. The next priority is enhancing our brand offering. So we have just launched 4 new brands. That brings our total brand count to 12, so we can appeal to a wider market. And we currently now have 5 brands in the luxury space, 4 in the premium space, and 3 in select service. I think the other thing we're really looking at is conversions. That's where we see most of our pipeline and opportunity. And it's also because we are still in an environment which is difficult for new builds because of cost of capital, high cost of construction. So a lot of our growth is in the conversion space, and we have some great brands like our soft brands and our midscale brands to be able to focus on that growth. We've really designed these brands to be conversion friendly for owners. So they come with fairly limited product spec, making it cost effective and easy to enter and join our system. And then I think the last, probably the most important priority, frankly, is to be able to underpin this growth, like you said, and be able to, make sure that the growth is scalable and make sure that we can really deliver on our promise to owners, is to strengthen our digital, our distribution, and our loyalty platforms. Yeah. So a couple of things we did this year. The first was we completely relaunched Minor Hotels. So Minor Hotels is now a guest-facing master brand for the company. So it's the umbrella brand under which all of our other hotel brands sit. Okay. We also completely redid and upgraded all of our digital platforms. And we relaunched our loyalty program under Minor Discovery, which has close to 30 million members. And we are part of the Global Hotel Alliance as well. So these initiatives are helping us to really, ultimately, what is our goal here is to be able to maximize our direct channel contribution in our hotels and strengthen our position in the market. Yeah.
And you talked about conversions, and clearly that has been the driver of net unit growth. As you mentioned, the development pipeline is quite moribund and has been. Where are you finding these conversions coming from? Are these from other brands that are trading into the Minor platform, or are you seeing opportunities of adaptive reuse in other asset classes?
Most of it in Asia is independent hotels that were unbranded previously and have an opportunity where the owners are now looking at, okay, how can I remain competitive, remain relevant in the market, and are looking to affiliate. Adaptive reuse, there are a few opportunities, but it's not quite as prevalent here in this part of the world.
Yeah.
Yeah.
And then
Yeah.
I would imagine also the fact that you've introduced new brands into
Yes.
the Minor portfolio.
Yeah.
What brands did you release specifically, and what needs are they meeting?
Yeah, great. Well, this is something we're really excited about right now because we just introduced, we launched 4 new brands.
Okay.
And these brands have been designed, created, and positioned so that they fill a gap within our own brand architecture and allows us to, remain up to date with the trends in the market and also what owners are looking for. So the first of these 4 brands is called Wolseley Hotels. Wolseley is a luxury lifestyle brand that will be focusing exclusively on city center, tier 1 cities only.
Okay.
So the brand is actually inspired by a restaurant in London that we own called the Wolseley.
Oh,
it's
yeah,
famous,
I know it well.
very iconic. Yep. And so we took inspiration from the Wolseley. The brand Wolseley Hotels will have some touches of British elegance and flair, but really we've completely reinvented the concept, something completely new, super exciting. And we will be soon announcing our first hotel. I can't tell you yet where, but it's going to be arguably one of the most exciting cities, most visited cities in the world. So,
In Asia?
Not in Asia.
Okay.
So
But
stay tuned to
with
that.
plans to bring that Wolseley brand into Asia?
Definitely,
Okay.
definitely. We are
All
looking
right.
at opportunities in Asia as well. Singapore, Bangkok, Tokyo will be our priority markets for Wolseley.
Got it. And then
Yeah.
what are the other 3 brands
Okay.
and what gaps are they filling?
Great. So the next one is called Minor Reserve Collection.
Okay.
It's a luxury soft brand. So here we are looking at curating a portfolio of exclusive, truly unique hotels that we can bring into this portfolio. We're going to be very picky here. I think the idea is to be quite selective in terms of the hotels we bring into Minor Reserve, but it will be for independent, unique hotels that we can bring in. Then the third brand is Colbert Collection. This is a premium soft brand. So similar to Minor Reserve Collection, but in the premium space, where we are looking at independent hotels that reflect their neighborhoods, that have a great food and beverage experience. But the idea here is that it's quite an open canvas with a lot of design flexibility. So it's going to be great for conversions and also for any owner that has a vision or a very clear idea of what they want to create with their hotel. Colbert Collection will provide that opportunity to them.
Exciting.
Yeah.
And so you've talked about these brands. Well,
One
there was
more.
one more.
Sorry.
Go.
One more.
Tell me the other one.
The last one is iStay, which is a midscale brand.
iStay,
iStay.
as in the
Simple.
letter I.
Letter I,
Got
stay.
it.
It's affordable, fun, it's seamless digital experience, and this is our first time entering the affordable mid-scale space. So there's a huge runway there for us to grow, I think, because we've not been in that segment before. And again, the brand will be designed for conversions with limited product spec and a very profitable operating model.
Okay. And
Yeah.
so as you've got these expansion plans from 600 hotels to 850, you've gone to 12 brands and just outlined 4 of those new brands for us.
Yeah.
Should we expect more brands from Minor in the future?
Well, it's possible, yes. We continue to look at M&A, of course. So if there are existing platforms or brands that we can acquire and bring under our portfolio and integrate into the system.
Yeah.
But most of our development will be, I think, now focused on growing these new brands that we've just launched, primarily through asset light, and maybe a few acquisitions here and there in certain markets only. But that's
And-
quite selective.
Got it.
Yeah.
And when you think about those brands and the expansion opportunities within each of those brands, how does region play a part in that? Do you see some brands translating more into an opportunity for some regions versus others, or do you look at regions all across the same way as opportunities for all those brands?
I think right now we're quite open to all the opportunities that come across, but for us really, I think there's 2 markets in Asia specifically where we are seeing most of the activity from a growth perspective. One is India.
Yeah.
So India right now is probably our biggest pipeline. It is the most active market in the region for us. And we're looking at specifically a segment of the market that is domestic travel and specifically leisure focused, looking for wellness or experiential resorts, because there's a huge lack of supply in that space, but a great opportunity across the country and growing demand from the local market. So we're looking at some really exciting opportunities and locations: Himalayas, tiger reserves, new beach destinations, and areas of cultural significance. So we can bring brands like Anantara and Avani, which would be really exciting because that's where we have a lot of experience as a resort operator too.
And what about branded resi?
Branded resi, definitely. So, I mean, we've always been traditionally a big developer of branded residences. So that's one business model we'll continue doing, is looking at where can we develop and sell branded residences. But we are seeing increasing demand from owners to do mixed use across the region. So brands like Anantara are able to command significant premiums from a sales perspective. So a lot of our new Anantara projects across the region will have some kind of residential or mixed-use component.
Yeah, and you talked about the DNA of Minor in both the operational side, as you guys have been owners and still are an owner lease model, transitioning more to franchise and management via an asset light. But you also mentioned that there's development in the Minor DNA as well. So as you guys are talking to owners, as you really progress into an asset light model, is it an advantage to be also an owner operator when you're speaking to those owners? Is there a rapport and a simpatico that you both understand what it's like to be on the equity side and the capital side? Do you see that as an advantage?
We definitely see that as a strength, because I think that's what really sets us apart from our peers and other management companies, is the fact that we call it asset right. So it's a combination of asset light and asset heavy. Even though we are rebalancing the portfolio, 50% of that will still be asset heavy. So from us, what that means is, we think like an owner. We look at the business the way an owner does, the way an asset manager does. And whether we own the hotel or whether we're managing the hotel for someone else, it's the same discipline when it comes to managing the P&L, driving profitability, maximizing asset value, return on investment. These are the things that we look at more than just management fees. And I think that's really the core strength and differentiator for Minor today, and will always be the fact that we come from that ownership background and then pivoted into a management company.
So Yasin, one of the most exciting markets in Asia is clearly Japan. What are Minor's plans for Japan expansion growth and for the brand?
It's another big focus market for us. So Japan is currently, I would say, seeing a surge in international travelers, and it happens to be actually the most popular destination for outbound Thais going from Thailand.
Oh, really?
So so we see a great opportunity for our brands. The approach we're taking in Japan is a bit different. We've actually decided that all of our hotels in Japan will be managed through a joint venture with a Japanese management company called Royal Hotels. So we basically co-manage our hotels with them. Why we do this is because it gives us a better understanding of the market, which we are still quite new to, and also allows us to be a little bit more present on the ground, be able to better service our owners and our hotels. So with that announcement, which we started this new joint venture at the beginning of the year, now we've signed our first Anantara in Japan, which is in Karizawa. A very exciting project, and we've got a few more great ones in the pipeline that we plan to announce very soon.
Exciting.
Yeah, great.
Great.
All right, thank you.
All right, thanks.
All right,
Thank you,
good.
Yasin.